This Nadine Haney brings out some very important points on in general about some things that people have opinions about. It's also she's really talking about oil and what if Iran is attacked, but she brings out a couple revealing statements, and I agree with this 100%. Not exactly about Iran attack and oil, but she goes on to state here, and I'll comment on this. It's noteworthy to mention an analysis by famous investor Mark Faber, known as Dr. Doom, but the guy's accurate. He's very good for being successful to predict a number of economic crises. Faber pointed out that the United States, following its recent gas discoveries, has an interest in the war with Iran. According to him, the United States is not capable to contain the growth of China's economy, the biggest rival to the U.S., without disrupting oil supplies from the Middle East, on which China has been greatly reliant. For the past 2 years, China has been the biggest buyer of Saudi oil. I think Lindsey Williams was throwing some curveballs there for sure, to discredit him, but I think he's basically right. I know a lot of people get aggravated at Israel sometimes with some of the policies. And yeah, I guess I agree with, some of the things. They ain't doing it right all the time. But, I gotta say this, man, because I don't actually agree with it all the time, because, it could be good and bad. Jews are going to be the scapegoat for this war. Israel is going to be the scapegoat for this war. And it's really going to be more about the powerful oil interest in the United States that are really looking to, yes, they want to jack up the price of their oil, be sold domestically, but they're looking to stop China somehow too. So they're trying to cut them off from oil. So, that's really what's going on. But you're going to see like Israel did it, and maybe that's going to be partly true. Now, these guys are shrewd. That's all I got to say. I'm bringing up an alternative point here. And I'm not, I'll tell you the truth. I will be very, very critical of Jews. But I'm more upfront about it to his person, to their face. I don't like, I'll get in trouble for saying stuff, believe me. So, I'm not just kissing anybody's butt, but I think they're going to be the scapegoat for this thing for real. I think they are. It's oil interest. That's what's doing it over here. The big money in this country don't like the fact that China's economy is growing so fast. But, they want one thing on one hand, like in other words, cheap labor. But hey, we don't want you guys getting too strong. So, that's what's going on. And this is another revealing little line here. This is good that she brought this out. I'm going to post a link on this, but she's got some good information here. According to the general rule, any increase of oil price by $10 a barrel will cause any exporting country to lose between a tenth to 5% of its GDP growth. So that's something I was pointing out, that high oil prices kill the economy. And this is what I say about they're going to do the quantitative easing at one point in time. Now, I'm trying to time these markets. Maybe that's not the smartest thing to do. I'm staying out of gold and silver for now, because I think there's going to be a plunge followed by a hard rise. In the United States, which does not have the resources to fund a new war, the Federal Reserve will resort to printing money through another round of quantitative easing, which might prop up the price of commodities and possibly the equities markets. He still didn't do it yet, so I'm going to have to watch what Ben Bernanke says. Now, as far as oil, not a great thing on technical analysis, but I could say that this forms a flag formation here. This puppy, when you're bringing it back out farther. And I know you can get, sometimes I like bringing it out a little bit further, because you could see some things that are going on here. But I can't ignore what's going on with Iran. So this might be, this might bring this up to 120. Actually, probably might be go through this next point, 114, 120, then have another pullback. But you know, this whole thing, it's kind of almost stupid to just look only at technicals, but this whole thing could be a flag formation too. Who the hell knows? Which would bring the price of oil up well over 150, because you would add this to the next rocket up, you know, as a long-term hold. You know, I'm going to say something else about these funds too. You know, the triple leverage, I don't like holding that fund. Boy, that fund is a short-term fund. You just do that for a day or two. I would not hold that fund, because that fund erodes too fast over a period of time, just on volatility. Now, obviously, if you knew something was going to go up 20% in a month, you want triple leverage, but that's a pretty scary bet. The double leverage, that type of leverage is more sane. I call it sane. I guess as long as you win money, it's sane, right? But it's like if you can't anticipate everything that goes on in the markets, obviously. If you think you're definitely in the right position, the double leverage will hold together a lot better over a period of time if your timing is off. And you might want to use some short you know, day trades with triple leverage if you think, you know, you want to ride on a trend or something like that. You know, looking at this gold chart again, you know, I still say it's going to have to do one more down to this fib point of you know, 1466, 1475, or whatever it's going to be. And same with silver. It's probably going to go below the 26. You know, and I go by the close price. I've been picking up on a lot of people. You know, even like, I think there was one from Money and Markets. I don't want to mention the guy's name, but he was wrong about some of the pullbacks. But you know, it's actually, you know, one thing he taught me is the close price is actually a hell of a lot more important than intraday pricing and closing prices. So I don't think you're going to see any kind of close above this, you know, where this last peak we made in gold. I think it's going to continue downward. But I think all these events are going to kind of coalesce, you know, where oil is going to go up. There's the next probably, it's probably going to go up to 120 before something happens. I don't know. It's probably going to go up that high. You know, maybe there'll be resistance at 112 or whatever. The gold is generally going to be in a downward trend. I think it's going to go down to here. There's going to be some kind of crisis in the euro, and even though they're making it sound like it's great. And then you're going to see the commodity prices going up because they're going to do a lot of money printing, a lot more money printing than before. I know they've been doing money printing even along here, but what's going to happen, you know, right now the wealthy really can't get into gold too much because, or silver, because there's not enough of it around to buy. I'm sure they're buying some of it, but you know, that takes care of like a 2 or 3% of their portfolio. What about the other 97% or 98%? So what I think is going to happen is, you know, you're going to see this is basically, I think, you know, and don't believe me, I don't put all faith in technicals either. So I know what you people might be thinking. Some people anyway. Technical this, technical that. But you know, say this turns out to be the big bull flag. It's going to go up, you know, from this amount at least. So it'll go way the hell up here. Well, that is when you're going to start seeing some of the more wealthy jumping into here. But you know, at one point in time, you're going to see the wealthy jumping in here. You're going to see the middle class jumping in here. It's going to be going up to, you know, over 3,000 and all this type of stuff. And at one point in time, you're going to see the middle class seeing like, oh, we got 10% gains. You know, maybe the wealthy jumped in here a little bit when they saw things were in a clear trend, and they got like, you know, 200-300% gains. And guess who's going to be left holding the gold? The middle class. The middle class. So I think there's a little truth to some of these other little conspiracy rumors out there that the middle class wealth is going to be stolen from them by the gold. Not just yet, you know, because when you're hearing this story, you're going to believe it because it's going to go down. But when it gets down here about this, that'll be a real buying opportunity right there. So hindsight is 2020. It's perfect, you know, but it does appear that, you know, we got one more dip going here, and nobody in the middle class is going to believe it who was never into this metal or hardcore metal bugs or whatever you want to call them, and then it's going to take off. But you know, unfortunately, I got on here because I found so many people were wrong so many times, and they were just cheerleading on gold and silver and bad mouthing Bernanke. But you know, I don't know what the heck Bernanke could do. It's a number of things that are going on, and it's basically, you know, Mark Faber's saying it right here. You know, pointing out that the United States, following its recent gas discoveries, has an interest in war with Iran. According to him, the United States is not capable to contain the growth of the Chinese economy, the biggest rival to the U.S. That's exactly what Lindsey Williams was stating. So, I mean, I just think Lindsey Williams was throwing some curveballs to discredit him. And obviously, he just can't, you know, they couldn't kill him. He couldn't even die from a natural cause, right? So, discredit him. He's basically right. He's basically right. But, you know, I don't mind that. It pissed me off because, you know, I bet on oil, and good thing I got out of there, even Steven. And, but it pissed me off because I was hoping to hit the gains on 2012 on the oil. So I was mad. I was pissed off, you know. But, you know, I didn't care if I got the gains in 2012, you know. I dump all that junk, you know. I don't care. It's a new year. But the guy's okay. At least he's saying that he doesn't know. But some people I get mad at because they act like they know, and they don't know anything. And just trying to apply a little common sense to this. So let's hope we got our bets right on this stuff. You know, look for a pullback in the metals. I'm still in double leveraged oil, so I think, and there was some other thing that went on with missile exchange or some rocket exchange in Israel. And I'm going to repeat again. Yeah, despite some of the things Israel does, it's, yeah, I could say they do some screwed up things. You know, it depends. It depends on who's in charge. And it's not who's living in Israel. You know, it's just like in the United States. Who the hell tells Bush or Obama what to do over here? Nobody, right? They do what they want, right? They're going to be the scapegoat. They're going to be a scapegoat. There's other junk going on. So, you know, I don't know. Don't get too riled up about Jews because they get too defensive too. Because, you know, they got a reason to be defensive, you know. So just kind of balance it out. You can be critical of them, but you know what I mean. Don't overdo it, you know.